Hey, it's me, Brad Hammond here, your investor loving real estate agent. Lots of things to talk about for third quarter of 2025. So, without further ado, let's get into the numbers. First and foremost is inventory in months. Look at this 3.8 months of inventory right now. You don't see that as high anywhere on this graph right here. It hasn't been that high since 2014. What is that, 11 years. Uh, Basically saying that it has been a seller's market in varying different degrees for 11 years, and we are just now getting into a buyer's market. So if you are a buyer that's been waiting for a buyer's market, congratulations, your ship has arrived. However, some price points are more popular than others. Look at this. The 400 to 500 price point range accounts for 22% of all sales. Right behind that, at 19%, is 500 to 600. Really, I'm seeing that 400 to 650 price point is really, really popular. That's where you're getting multiple offers on properties. So if you are looking to sell in that price point, it's still a good time to sell. If you're looking to buy outside of that price point, there's some great deals out there. If that is your price point to buy in, let's get a little bit creative and figure out a game plan. Interest rates are continuing to dip down, as you can see right here. The Fed is saying 6.3%. I'm seeing a lot of my clients coming in at closer to 6%, seeing less than that in the fives. I would love to see interest rates down into the solidly into the mid fives. And I think that we're going to be there in the next couple of months or early 2026 as well. Pending sales are basically been standing in line with previous years, except for August right here. I know August was a pretty busy month for a lot of my fellow agents as well, which is great. However, when we see closed sales for September, I would have assumed this would have been a little bit higher. But, when we compare August to September of previous years, it takes a really steep dip down. And for us in 2025, we did not have such a steep decline. So I think that's where we're seeing those numbers being realized, is that even though pending sales were up a decent amount, we just didn't have as much of a decline as we did in previous years. So new listings are basically remaining in line with previous years. Average time on market is 62 days, a little bit higher than previous years, but that's what we've been experiencing all year. Active residential real estate listings is again elevated from last year, but this gap between 2024 and 2025 is starting to narrow. And I'm wondering if that is going to continue or not. Basically, a lot of that has to do with the days on market and the new listings that come on. So I'm watching that carefully. Sales price, I like to look at median sales price, not average sales price. And we are up 0.9% from last year, call it 1%. And what I've highlighted here is in red are the Septembers for 2024, 23, and 22, basically saying that the prices start to go up in the springtime, hit their heights in June or July, and then they kind of start to fall back down. And that's exactly what we're seeing here. But when we compare September of this year to September of last year, we are up 1%. I showed this graph on my last market analysis because I thought it was really interesting that we had a sudden downward trend in June, and that has really kind of continued, leveled out a little bit here from August to September. But what this is saying is that sellers are accepting offers that are on average 1.25% less than what they're asking for. So buyers are trying to get deals out there. I'm assuming that there have already been some price cuts. I'm seeing a lot of price cuts out there from sellers. So that's what we're seeing, is that the buyers are getting deals in a buyer's market, and the sellers are starting to get the message that they can't get the price that they were originally hoping for. Affordability index is a graph I love looking at. We can see right here that in September, affordability is starting to tick up. So we are at 93% of affordability. I would love to see this at or above 100. The biggest lever here with affordability and pricing per month, your monthly mortgage amount is interest rate. So as those continue to go down, we're going to see affordability go up. My biggest takeaways is that, it's been a flat market for the past year or so, and now we are definitely in a buyer's market. And as I mentioned, we have not seen a buyer's market like this in over 10 years. So if you are somebody that's been waiting for these kinds of conditions, take advantage of it now. I don't know how long it's going to last. I'm going to do quite a bit of research to give you a best guess in my next market analysis, but we will find out. Economy is definitely starting to change. There was a big job revisions showing that there was quite a bit of job losses that people didn't see coming. Inflation is starting to go up. We have a slower GDP, so the economy is starting to slow. That is going to decrease interest rates, which theoretically would spur real estate activity, but we'll have to see if the consumer sentiment is there as well. What's working right now are townhomes and new construction. Townhomes are such a good deal right now. So if you can get one and you can do a medium-term rental with one, or just a long-term rental, even just for you to have as your personal property, there are some great deals on townhomes right now. New construction is offering lots of incentives as well, so don't sleep on new construction. I think that the rest of the year and beginning in 2026 is going to be a great time to purchase property. If you are looking to sell, outside of that 400 to maybe 525 price point, maybe wait until springtime when there's more buyers out there on the market. Another thing I wanted to touch on is that, prices have been remaining more or less steady, increasing by 1% from last year, but there's slower demand, but we are still maintaining our medium price on homes. So I'm curious to see if that's going to increase or not, but I'm really optimistic that we are going to continue to see prices hold steady or grow slightly, but more affordability with interest rates dropping. So that's the show. What do you think? Do you agree? Do you disagree? Do you want to talk a little bit about what's going on in Vancouver? A lot of the same types of things I'm seeing in those numbers as well. But hit me up, shoot me a email, a text, give me a call, and we'll talk about things. And we'll create a game plan and figure out what's best for you. All right, cheers.